So did they forget we had a class, or is it just not actually being recorded in class? Anyone? Can anyone hear me?
I was just wondering the same thing. I'm not sure that the presentation is coming through.
Okay, I'm gonna call Ashley. Can you stop? Ashley's fixing it.
Thank you.
Woohoo! They're coming.
Hey Brad, I have made you the host, so you should be good to share your screen. Now hit share screen. Yep. There you go. Very good. And I'll let you.
Okay, thank you. Can everybody hear me?
Yes.
Okay, great. Thanks for your patience there, and thanks for joining us on this beautiful day we're getting today. We do have a presentation that kind of goes through different slides on, the basics on how HECM for purchases or reverse mortgages work, and then who might be eligible, and you know, kind of an idea of the perfect candidate to maybe look into what their options would be as far as utilizing a reverse mortgage. So the first screen here talks about people that are eligible. So the people would have to be at least 55 years old for a reverse mortgage type product. Or the actual FHA insured one, people have to be 62. But ideally, they, their income, when their income's fixed and pretty much most of their net worth is in the equity they have in their home, those are, that's kind of like the perfect candidate that might benefit by doing a reverse mortgage, or might not even know that it's an option. So this first screen just talks about they're mostly boomers are in the age group that could consider a reverse mortgage, but there are a lot of Gen Xers that are right behind them that are going to be, well, actually, some of them are above 55 now, and it just talks about how much equity there is in the country, $13 trillion. And then, it also talks about a lot of people that are retired don't, they think they kind of have to stay where they're at, or a lot of people are choosing just to age in place, even if their current home's not ideal. Some people might have a 2-story house and they don't really go upstairs, and it's getting harder and harder to use the stairs or something like that, where they ideally might want a ranch or a condo or something like that, and they just don't think they could afford it or take on a new mortgage. And one of the biggest things with reverse mortgages are there's no payments required, and they're optional. So people can pay it down. I mean, you still could decide to sell your house even if you had a reverse mortgage, but there's different types of events of how, what they call triggering events on here. So this next slide just talks about some of the obstacles and barriers. There's of course still a housing shortage. A lot of people when they retire, have what a high debt to income ratio. So if they wanted to access equity and stuff in their house, short of selling, a lot of times there's really nothing out there they can qualify for. And a lot of people that have a lot of equity in their house don't have a ton set aside for retirement savings. So they're kind of living on whatever they get from pension, Social Security, and maybe just like a small amount that they're taking out of their IRA to just kind of get by with living expenses. So they with reverse mortgages, it just it opens up options for people. They might be able to live in the beautiful house and just have the ideal place. All they're responsible for are the taxes and insurance on the property, and they don't have to make payments. Just kind of talks about how people could relocate closer to family, or even like a warmer climate or something like that. They find a home that's ideal for them for their current health, or what they expect their health to be in the next 10 to 15 years. So we'll get into kind of the basics on here. So the whole idea behind these is they take out the loan, they have to put down a pretty sizable down payment that typically comes from the equity in their current home. Doesn't have to, but they could use savings or something like that as well. But once they have that in place, it's up to them if they want to make a payment or not. And this is just a little comparison on reverse mortgages to standard conventional mortgages. Obviously, conventional, anyone that has the credit, down payment required, and the debt ratios and that sort of thing could qualify for a conventional loan. Reverse mortgages, someone has to be at least 55 years old. Again, no payments are required. They don't do debt ratios. Credit score doesn't necessarily matter on these, so the rates are just kind of set. So it doesn't matter what someone's credit score is. Someone with an 800 credit score would get the same rate as someone with a 500 credit score. The only thing that sometimes they look at, if someone does have rough credit, or they're kind of not bringing in enough income to comfortably live, they do this set aside where they'll kind of through the averages determine how long they'll probably live in the home until they either, one of the triggering events is either when they move out, or of course, pass away, or the last spouse pass away. There's all kinds of things like that that someone would get educated on if they were looking into what their options are there. But they do what they call a set aside, where they might take out money, kind of like an escrow account for taxes and insurance, that will reduce how much they have for a down payment, but it'll make it to where they don't have to worry about paying their property taxes and insurance while they're living there. The borrower owns the home. People that have heirs and family, children, things like that. If someone does, when they reach the end or reach one of the triggering events where the reverse mortgage ends, they always offer the house to the heirs, regardless of whether there's equity in it or not left. They allow the heirs to purchase it at 95% of what the house would appraise for. So it's not like the bank takes the home, and that's not the goal in these. But the bank or the servicer gets their money and interest. It just accumulates for however long they have the mortgage. And then some of the keys for the reverse for purchase, no payment again. The lending guidelines, super flexible. Definitely increases the buying power of what someone could afford, and it keeps their savings where they're at, so they can do what they want to do and enjoy their retirement. One of the myths, reverse mortgages kind of got a bad rap years ago. They have kind of revamped how they work, and there's a lot of safeguards in there, and they are actually insured by HUD, just like FHA loans are. Someone wants to consider getting a reverse mortgage, they do have to complete a counseling course, through a third party that's HUD approved, to make people, fully understand how everything works with a reverse mortgage. That's something they have to do up front before they even, get into a contract or anything. It's kind of part of the pre-approval process. Of course, there's no penalty. They could pay it off anytime they want. They can make payments if they want to, and they could sell as well if they decided they wanted to do something else, a few years down the road. It does protect the non-borrowing spouse, and the age of the non-borrowing spouse comes into play with how much they need for a down payment, because everything's factored into approximately how long someone's gonna live or need to live in the home, and that's just all done by averages pretty much. And they'll never owe more than what the home's worth. I had mentioned where the heirs could buy from the bank at 95% of what it would appraise for if they chose to. And then kind of talks about the ideal candidates for something like this. If someone just wants a right size home, single floor living, like a ranch or condo or something like that just better fits their lifestyle, and has a lot of equity in their home, they're a lot of times one of the ideal candidates, unless they've got a ton of savings. They talk about kind of the sweet spot for someone's net worth with retirement, being somewhere nationwide. It's like somewhere between 200 and 1.5 million. I think in our market it would be more people that have less than $1 million in IRAs and that sort of thing. It might be a better financial decision for them to leave money in the market and draw the income and stuff off that, rather than pull a bunch of money out, pay taxes on it to pay cash for a house. And they also could get a much nicer house and still have the same budget. Um, yeah, and the flexible financing, again, that comes down to there not being minimum credit score requirements or anything like that. Okay, and for the regular one that's insured by HUD, one of the spouses has to at least be 62 years, and then there's other what they call proprietary reverse products, which have a lot of similarities to the HECM or the FHA insured one, but it's for people that aren't 62 yet. And of course, they'd have to occupy it as a primary residence. If they ever moved out, that's one of the triggering events to where the reverse mortgage would be called or be due and payable at that point. Then just talks about the type of homes, pretty much the same types of homes that are, for standard properties, and they can be multi-units as well if they wanted the rental income from other units. If it was a 2 to 4 unit property, can do them on manufactured homes, condos that can get approved by FHA. And they can do those with spot approvals as well. There's not many condos around our market that go through the process to stay on FHA's approved list. If you look at those, they're kind of few and far between the way their current system is, which that's a whole other topic. I think there's a lot of flaws with FHA approved condos, but it really isn't that hard to get a spot approval. It just takes about a week and a half. Got to occupy the property within 60 days of closing, like the conventional FHA loans. That's all kind of the same. They can do them on new construction homes as well. Much easier if it's a builder that is building specs that the home's built already or close to being finished to where the certificate of occupancy can be issued. They can get concessions as well, up to 6% of the sales price to cover some of the costs. And then not allowed, real similar to regular loans, can't have the chattel or can't be any repairs that are, not completed before they move in. Then it just talks about the buyer paid fees, and then customary seller paid fees they're real similar to the other traditional loans that are out there. Yeah, and these just go through some of the basics as well. I'll just kind of buzz through these quick because it's pretty standard for the other types of loans as well. That unacceptable one, people can't take loans out for down payment, cash advance on credit cards, and not allowed to get a second mortgage, because it'd be, that it would conflict with it being a primary residence, and you can't do bridge loans with these. So it's a lot of them. If they have a home, and they're using their proceeds, they'd have to be under contract to, start the reverse mortgage and have a good idea what their proceeds are going to be. They can put it in a trust if they want to. And then one thing with these, if the appraiser requires repairs, and it's a same as an FHA appraisal that gets done on these, they do require them to be completed and paid for by the seller. So that's something just big to know up front. So that can be negotiated in the contract. And getting into the section with kind of some examples on how the numbers would work. You know, it shows the age, and obviously the older somebody is, the closer they're going to be to that average age, average lifespan that they use for a lot of the calculations here. So these grids here just show the amount that they need for the the amount that they could borrow at various sales prices. So you can see it's a pretty good chunk that they need down on these, and of course, the older they are, the less they would need down. Um, Probably in our market that 400 to 800 is probably the where most of the people that would consider one of these would be. But they do, and Keith Bergman's with me today. He's originated a few of these recently. They can work good for people that might be living somewhere they don't want to move, and they really just can't afford their payment anymore. This could be a solution that could, bail them out, pay off all their debt, get rid of their house payment, and they can be done as a refinance as well as a purchase. So sometimes you might run into clients that have family members or something that they may come to you, and this could be something that they could look into that could really make them a lot more comfortable. And I will send this presentation out to as well after this to everyone that's on this today. And then, of course, we're always available too if you have any questions or you have anyone that just kind of wants to inquire about it. So this next one just talks about the differences: right size without reverse for purchase, and then the right size with reverse, and it just kind of shows you the different breakdown and how much money they would need, how much cash they would have out of pocket. One of the big things with this too is it allows people to leave their money invested in the market and not have the payment.
Here's the savings.
Yeah, so this next one,
No payments.
right? So they have this example here that just kind of shows the savings in their budget, like estimates like on having their money in the market, like what it could be making, and it just kind of shows an example how someone can actually increase their net worth by using this product, and also live in a house that's more perfect for what their needs are. This next one has an example. It says hell on here, but it compares what payment would have the 1897, and how she avoids like spending that much money over a 15-year period. And then they also take into account the house appreciating in value, and HUD comes up with that calculation at the time that the mortgage is taken out. And it's what they call non-recourse security. So even as the balance grows, they can never owe more than what the home's worth. And that's what the insurance is from HUD. If that ever happens in a situation, then HUD basically comes in and covers the difference. And that's where the way that mortgage insurance works on these, that's what that money's used for. And again, a super simplified qualification on these as well. And this next screen just talks about some of the benefits. You know, there are some agents that have been successful kind of using this to, just add, you know, potential clients and potential sales, for people that may be in this situation that may or may not qualify for traditional financing. Talks about converting non-buyers into buyers, reverse for purchase bypasses the debt to income ratio, credit score requirement, underwriting issues, that sort of thing. They're much easier on these types of loans. Unlock sales from non-sellers. Homeowners that choose to age in place may reconsider, like I mentioned earlier, if they're in a 2-story home or something that used to be ideal, 10, 15, 20 years ago, but really isn't now, but they are just choosing to stay there to age in place. This could be a potential option for them to just get something that's, one level and easier for them to live and function. Again, it's a lot of people that wouldn't qualify for another home could qualify for this if they have the equity and meet the age limits. And then kind of, if you get a couple of these deals a year, obviously it's helps the income as well. And this slide just talks about the builder benefits. It's something that if you wanted to approach builders or something like that, talk to them about these options. It just kind of gives you a few pointers to differentiate yourself from the competition out there. This next screen it does a recap of just kind of all the different benefits and some of the people that might be ideal to consider this as an option. Okay, and this talks about when a borrower moves out of their home, they or their estate have up to 6 months to repay it. And then you can get extensions as well if there's delays with the estate and that sort of thing, and probate and stuff like that. The heirs can sell the house, or they could keep it. They could sell the home and keep the proceeds that are left, or they could refinance it into their name, again at 95% of what the appraised value would be. Now we do have a reverse mortgage department. We partner with other loan officers that's all they do are reverse mortgages, and like the whole processing team, is familiar with how they work, and average length of time on these are 30 to 45 days. They can be done quicker than that. I've heard that they have got some done in as little as a couple weeks. But we have someone we can reach out to when someone inquires with us, and we'll get a total breakdown on what their options are to send to them, and we would get that within a couple hours typically. Then we can get all their questions answered and that sort of thing. And we just have real good support with this product. And that's pretty much the end of the PowerPoint. Does anyone have any questions out there?
I've closed a couple of these. So we did have a
purchase transaction that we closed just recently. And in that instance, I mean, the benefits to the borrower was it was someone that was retired from that standpoint. So she was on a fixed income and she had just inherited money from her mother deceasing. At that point, you know, for her to purchase a home on her fixed income, she was going to have to use all of her inheritance to try and qualify for a conventional mortgage. When we looked at the situation, it made more sense for her, and she was thrilled that she could actually purchase this and not use all the money. So she would have a loan on it, plus then she would not have the payment. So when she did that, she ended up saving or keeping an additional $50,000 that she was able to put into her savings account or wherever she wanted it. But to her, that was very important because she wanted to be able to do things for her with her family. And her cash flow on a monthly basis was going to be great because she had no payment. She just had to maintain the taxes and insurance. So her situation, it was just ideal. She knew she was buying this home. She planned on wanting to live there till the end from that standpoint. But that's one of the examples of how that can work on a purchase. And then we've also just closed a refinance where someone was in a condo. And over 15 years, the association fees have increased quite a bit. And in that case, she's gotten to the point where she was in a negative cash flow with their current bills. Didn't know what she was going to be able to do. We spoke with her attorney and her financial advisor and looked at the situation and decided to do a reverse mortgage for her. What she did in that case was we were able to pay off a first and second mortgage, so she'd no longer have that payment. And we were able to consolidate and wipe out her credit card debt. And she improved her cash flow from being negative to having an extra $1,200 a month, which was very important for her at this stage of her life. And again, her whole goal was that she wanted to hopefully stay in that condo till the end. So just a couple examples of how it works on a refinance or a purchase there. And if you have any questions, reach out to either one of us anytime.
Well, if nobody has any questions, I think I've got the names down. I'll email you this presentation, and then have a couple flyers as well that are ones that you could give to clients, or that just kind of have some simpler facts about the product, and then stuff to just make it easy. But if you ever run into someone that just might want to inquire about this, we can gather all the information and stuff for them pretty quickly. Again, appreciate everyone's time here today, and hope you enjoy the rest of this beautiful day and have a good rest of the week and a good weekend.
Thank you.
Thank you.